Hello and welcome to the Wendell Effect for this week, and I apologize, no camera today, but we'll go ahead and get through the information just as well. So just remind you that we are not registered broker-dealers or investment advisors. We're looking at this information from an educational standpoint, not telling you to buy, sell, or hold any particular securities, and we're not subject to trading restrictions, so we can have a position of security initiate one at any time. Go ahead and stay in touch with us. I'm checking on the email. Some people told me it hasn't been really working lately, so actually let me give you a different email address that you can use as well in the meantime. And well, I'll just go ahead and type it in, but you can use that one or try to use that one and see if it works. And if it doesn't, you can always try to get a hold of me at bwendell.cmt@gmail.com regarding comments or anything about the video itself. So there you go. Got that one too. Anyway, I'm still responding to Twitter and everything else. Anyway, for the schedule for today, got the weekly market analysis as usual on the equity index futures, followed by the energy futures. Going to be moving into sector analysis, following up with Indian markets. I'm not going to look at crypto today because there's not really much to look at. Everything's still pretty just kind of bouncing back and forth and more appropriate for day trading only. Okay, so we'll start off looking at those equity index futures for the week of August 28th through September 2nd. Yeah, we had a pretty big decline at the end of the week, but that's really to be kind of expected. When you take a look at the ES here, you see that the overall previous week we had the big topping tail on the candle. And that indicates selling pressure. We just kind of confirmed it, obviously, with the move down. And we never made a high with the RSI above 60. So that was extremely bearish. And therefore, we're not out of the bear market yet. You know, what a lot of people are saying was that we were supposed to have some sort of a soft bottom. And I don't think the bottom is in. So the fact that we could not break above 60 on the weekly, even though we did make a higher high, it looks like we're getting ready to push back down and may at least bounce at 3,900, if not take it lower below 3,600 on the next move down. You know, historically, seasonally, September is the worst month of the year for the stock market. So we're kind of heading into that, maybe a little bit early, but we're heading into that time of year that's a little bit bearish. So we could see some more decreases in price. Let's put it that way. And looking at the daily chart, well, we didn't really hit any kind of daily supply, but we have put in lower high and lower low again. And recently the high that was put in on Friday basically was not above 60 as well, so that's extremely bearish. And we should continue to push down to 3,900 for our first bounce. Don't really see any kind of demand except for that 3,900 area. We'll see if that's just going to be a small dead cat bounce before we push lower. So, starting off for the week, you see we went down from a 4-hour supply on Friday, and that's where just declined dramatically. We do have a daily demand that we probably will hit on Sunday night or Monday morning at 40.22, and maybe give us a small bounce before we go lower. And like I said, on the weekly and daily, we basically had demand at 3,900. If we go a little deeper than that, then we got 38.59 as our 4-hour demand zone. So when we take a look from the 16th of June, which is when we were rallying, we had leadership from the NASDAQ for the most part. That was our leading market to the upside. So when the NASDAQ hit the supply zones, which I'll show you in a moment, that's pretty much the signal that gave the weakness time to grow, and the weak markets pretty much took over. Actually, what happened was, if we go now, let's see, there it is, to the peak that we just had in early August or mid-August, you can see the NASDAQ is actually taken over as the leader to the downside now. So not only did it lead upwards, but it's also leading downwards. So we want to take our cues from that. So again, looking at the NASDAQ, you can see that when we bounced, we pulled back 61.8% of our recent decline. And of course, we failed to get above 60 on the RSI again, just like we failed on the ES on the weekly chart as well. So that's foretelling a little bit more bearishness to come. We do have a little bit of demand possibly on the weekly here. You got base rally at about 12,100. But if we push through that area or see the RSI go below 40, that'll indicate that we might actually take out new lows below 11,000. Looking at the daily, we kind of completed a head and shoulders. Now normally head and shoulders are sloped upwards, but this one is sloped downwards for the neckline, which gives us a measured move right around that 12,000 mark if we take the height of the head and project it from the breakdown that we had on Friday of last week. So definitely seeing lots of bearishness. There is a little bit of daily demand here at 12,186 to 11,854, so we might get a little bounce before we continue to push lower. But yeah, I'm seeing lots of bearishness coming in starting off the week, kind of continuation from last week. On the 4-hour chart, the big decline started, as you saw from the higher time frame retracement levels and zones, and we had a negative divergence, which led to our decline. And when we tried to rally, didn't really have enough bullish momentum to break to the upside, and you can see we just dropped again. So there may be a little pause right about 12,300, as there's a small little demand zone there, but really not a whole lot going on to keep us from getting down to 12,000 or even lower later this week. Actually, maybe not this week. I would say maybe 12,000 would be the bottom this week. Looking at the Dow, this has also been somewhat of a weak index. It did try to pull upwards and actually pulled back a little bit more than the other indexes, up to 78.6% retracement, but again, never went bullish on the indicator. So it was very, very weak. We haven't been above 60 on the RSI the entire year of 2022. So on the daily chart, you see, again, we made lower high and now lower low. So we're in a bearish trend here, getting ready to bounce possibly at 32,000. There's a little bit of demand in that area. And if we end up breaking through below 40 on the RSI, we'll go through that demand after a small bounce. And then we'll probably settle again about 31,300 is the next area of demand. Ultimately, though, I think by the end of the week, we could even go lower. So I wouldn't be surprised to see us testing 30,000. On the 4-hour chart, really not much here. You know, the fact that we're coming into a 4-hour demand here at 32,144, we might get a small bounce on Sunday going into Monday, but ultimately seeing more weakness coming in this week and pushing us a bit lower. I don't really see anything that could drive us higher unless something drastically changes in the markets. The Russell was also one of the leaders to the upside, and you can see it actually hit a weekly supply zone and started turning down. So it wasn't just the NASDAQ, but the Russell was also very much leading us upwards. And we came into that drop supply zone, started turning down over the past couple of weeks, and we, again, could not get above 60 on the RSI, so lots of weakness there. You take a look at the daily, pretty much same picture. We didn't really run into supply, but there's a lot of selling pressure that we met up with at this high here. And we are making lower highs and lower lows. Nearest demand is 1833.40. These are not buying opportunities, these demand zones. They're simply pausing points where, you know, we may bounce a small amount. If you're day trading, you might get a day or so of intraday opportunities long, but for the most part, there's just more opportunities to look for shorting, really, when you get those bounces. And then the next demand is at 1776.3. So on the 4-hour, we have another new supply zone that just formed here in 1950 and ultimately looking to go down to about 1752 or 1714 for the next 4-hour demand zone. So we could free fall pretty easily with just a little bit of pausing along the way. Moving on to the energy markets for the week of the 28th of August. On crude oil, not really much has changed here. We got that weekly demand that we still haven't gotten to. We're moving a bit sideways right now. You see the alternating colors of red and green. That's indicating sideways motion, and we're kind of settling right near 50 on the momentum indicator as well, which is midpoint, and again, not real good momentum in either direction. We've got a lot of back and forth on the smaller time frame charts. And on the daily chart, you see that we made the low, high, lower low, then higher high. And we couldn't get, well, we had a positive divergence here to bounce, and then we couldn't get above 60. So this is suggesting, even though we did break out to new high, we don't have enough momentum to continue to go higher above $100. We're probably going to push back down. And since we've tested this area of demand previously, we could break through that. So we could see some push to the downside here on crude oil. On the 4-hour, we had a temporary bounce here at 91.34, but I don't even know if we're going to get back up to 94.85. That is supply, but if we fall, I wouldn't be surprised to see it fall from about 94 and push down through that demand and break lower. So we'll see what happens in crude, but overall there's a little bit of weakness, although mostly just really pointing sideways for the bigger time frames. So it could get a bit of choppiness going on this week. You know, taking a look at what's going on in crude oil, historically, for the last 25 years, and let's see, wait a minute, that's only one day being shown. It should have shown more on this. There it goes, yeah. 28th of July, 8th of August, that's the old one. Did I not put in the new one? I'll have to put in the new one here. We'll go ahead and take a look at that. For some reason, I think I put down the wrong month. But I can go out to a browser real quick and bring up the right one. Just got to log in for a moment. There we go. Yeah, just log into my Season X. It'll only take a moment to do that. Share with everybody my password right there. It's ... Anyway, so if I go into popular instruments, we go to West Texas Intermediate Crude. There we are. Now we can take a look again. 15 years history of this, and at the end of August, there we are, 28th. Well, if we go through September 2nd, it looks as though it's actually a little bit bearish. Not by much. 60% of the time we move to the downside over the last 15 years. And you can see the average return's about a negative 1% decline. So that's kind of in line with what we just saw in the charts, that there's a little bit of bearishness coming in right now. So we'll see if that's going to be the play. Kind of looks like it. On nat gas, we got a different picture. We did break out to all-time highs, which was expected. I talked about that last week. But we couldn't hold those highs. We couldn't even close higher. We closed lower. And we see that we have a lot less momentum than we made the previous highs. So that's a little bit of divergence and suggesting we might get a little bit of a pullback this week. Not a trend reversal per se, but definitely some weakness possibly coming into price. Looking at the daily chart, we made a measured move. Last week I had basically tried to touch 61.8% of the previous impulse. So it's not as big of a move as we had before, but still a little bit bullish nonetheless. And just kind of went a little sideways, but we're seeing topping tails again. So that's indicating a bit of selling pressure and a lack of momentum. On the 4-hour time frame, could be a head and shoulders. Notice the left shoulder, head, right shoulder forming. So we'll just have to see if we break the neckline, and we've already kind of tested this demand. Probably has a little bit more buying pressure here. So if we do break the neckline, wait for a bounce first off the 8.9 to maybe retest the neckline before we go short. That's a very high probability. So if I go, for instance, to my nat gas chart here, and I'll bring it up. Oops. There we go, nat gas. Again, on the 240-minute chart, I'll point out the head and shoulders I was just talking about right here. Got to take that off snap mode. So we could use the wicks or just the bodies. The bodies look pretty good, but yeah, I'll keep it that way. You can see we just opened up and actually gapped up, so we're kind of still forming this right shoulder. But if we do break that neckline, like I said, what should happen is we get a bounce where you break through, bounce off this demand, maybe go a little deeper than you did before because you wiped out some of the orders. But when it comes back to the neckline, that would be the shorting opportunity on the retest after the bounce, because that would wipe out the orders and give you the opportunity to see the drop in price. So that's kind of what I'm expecting this week in nat gas. And again, we're already seeing the selling pressure as the markets have opened. So moving along here in the energy markets, we see that 60% of the time over the last 10 years, it's, let's see, August 28th through September 2nd, it's been a little bit bullish. So 60% of the time, a little bit bullish, but just not seeing it for this year. This might be one of those down years. Looking at gasoline, not a whole lot going on the weekly chart. We're just consolidating still, moving a bit sideways and choppy. On the daily chart, we made a run to the demand zone and bounced a couple of weeks ago. We're making another run into that. So I think we're kind of chipping away at this demand before the prices break a little bit lower, or just kind of base a little bit sideways at the demand this week. Just not seeing a lot of bullish pressure to go up. And I don't really have any trading opportunities. Even on the 4-hour, everything just looks kind of listless. No real momentum, just kind of trading sideways. You're better off looking elsewhere for opportunities. And even on the seasonal move for the last 10 years over this week, 50%. Sometimes it goes up, sometimes down. So that's telling me, again, we're just likely to go a bit sideways. We don't see a lot of momentum in either direction. So better to look elsewhere for better opportunities. Now with heating oil, we are running up into supply. We have a lot less momentum than when we were first in that area. That should hold. 4.0298 or 4.03 basically. Looking at bouncing off that if we hadn't already, and maybe pushing down towards the 3.09 area. So I'm expecting a lot of bearishness this week from the heating oil because, again, we came into that supply zone. Now, we won't make a fresh low. We're going to bounce before we break this low because we were above 60 as we're coming down. Oops, sorry. Going to the daily chart, you're starting to see a little bit of the rollover there. You had a little bit of a rush at the end with some of the novices jumping in late, and typically that is right before a drop. So I wouldn't be surprised to see us pull back down. We came off that weekly supply, but we could bounce at 3.47 here, the daily demand zone, because again, we're not going to make a new low without a bounce first. So that's the bounce point. So intraday, if you got some shorting opportunities, you want to target that 3.47 area. And there may even be a bounce before that. You see that same area, that 3.47, 3.48 right here on the 4 hour. However, we're making lower highs and we need to make the lower low for the trend, but there may be a small bounce here, 3.81 before we break down. But I'd look to see if there's supply that gets formed. And I hesitate to call the 4 area a supply zone, although you do have rally base drop right there. It didn't break to new lows, so it's not really a good zone. But look to see if a new zone forms, or even intraday, giving you a shorting opportunity. Watch for a small bounce of 381, but ultimately we're targeting 3.47 by the end of the week. Looking at the New York heating oil futures for the next month or so, almost a month, a little less than that, you can see it usually declines a little bit, but overall 50% of the time it went up, 50% of the time it went down over the last 10 years. So 5 years up, 5 years down, although the return to the downside is a little bit bigger, about negative 1.33% average return. So I would say there is a bearish bias here, just slightly, even though every single year has been a little bit opposite of the last year. Anyway, let's move into the stock market analysis. Take a look at the stocks and maybe some hot stocks that are going to happen for this week, for the week of 28th of August. You take a look at the last 6 months and everything's starting to turn a little more bearish. You know, we still have utilities and, of course, energy with the inflation issue still pushing to the upside. Looking at just the last week, you could see that, everything's pretty bearish except for energy. Over the last 6 days, we pretty much took a tumble in the markets, obviously, and energy held up. And that seems to be the only sector that's showing any kind of life left. Looking at the overall map, you can see the only green is energy for the last week. We did have a little bit of basic materials, but not much, and pretty much everything else is bleeding across the board. So moving into individual sector ETFs, the XLY, consumer discretionary, is still retracing the upward move. It might actually be starting to impulse down. You know, we put in this high where we're not above 60. So, instead of this being a retracement, which is pretty deep already, 61.8, we may actually be impulsing down now and seeing a trend change on that discretionary. We'll just have to wait and see. But the fact that we made some new lows leads me to believe that, this is not just a normal retracement anymore. We might be impulsing. So if I go to XLY, just out of curiosity, I'll go to the daily time frame, XLY, and zoom in a little bit. Again, let me get rid of the retracement and plug in extensions, because if we are impulsing down, and let me fix this with, make sure I get the accurate numbers. There we go. And there. So you can see we've already moved about 61.8% of the previous impulse, and we got new targets at 154 and 147 to the downside if we keep going. So just got to find a good entry spot, but I'd say there's more shorting opportunities in XLY. Communications, there's better places to look, but we still have room to go to the bottom of the channel on the daily chart. We should hit that 5404. I was trying to break a little bit up. We broke that trend, kind of retested it too if you drew a trend line through there, and we're heading down now. So a lot more bearishness coming. Communications, look for more shorting opportunities. The technology sector did a little head and shoulders and is broken down, almost made it to the measured move. There's no demand nearby, so we should be able to break down pretty easily to the downside. So again, look for more bearish opportunities in those markets and those sectors. So you can always take a look. I didn't do it, but you can always, if you have the right tools, take a look like this. If I go back to Season X on the home and my screener, I can look at, let's see, communication services was one that we said was going to be a bit bearish. We take a look at the last 15 years or so. And if we want to look short term, we can go to 85%. Nope, nothing there. Let's go to 80, just make it a little wider. Nope, nothing in that sector so far. I'll go from tomorrow. And no. So we can go to the different sector. We can go to, oops, wrong one. Consumer discretionary. And again, nothing there. Kind of interesting. Let's go shorter term. And maybe even just last 10 years. There we go. Garmin is a possibility for a short. You see 80% of the time it has moved to the downside. So possibility there. And again, you can just search for those particular sectors that are going to be bearish and start looking for those shorting opportunities. So technology is also one of those moving along here. Industrials also making lower highs, lower lows, likely to see more selling opportunities because we don't have a demand zone until 90.88 for the ETF in the sector. Lots of room to go to the downside there, unless we have more of these Fridays. Not going to get there real quick. But for the most part, it looks like we're going to continue to sell off of quite a bit here in the markets. Copart was actually a trade opportunity for the long side, and I was waiting for it to come down to demand. So if the industrials are going to push to the downside, we can see so far this has gone a bit sideways. It actually held up, especially on Friday when the market's really weak. We just went sideways here. So if we can pull back, let's see. Yeah, this is showing. I don't think I had the most recent, do I? Yeah, I do. Unfortunately, it's not really doing much. Again, it's just going sideways. So if we can still pull back, there may be a buying opportunity if the market starts to rally at all, because this has been a strong stock in a very weak sector and a weak market. But we still have to wait for a little bit before we can even enter. And this is looking at the current 4-hour chart. You see we did start to pull back, but we haven't reached the entry yet. So Monday morning, if we happen to gap into that demand zone, you got to be careful because we got a lot of selling pressure here. And we could break through demand again with this very weak market. So look to see if there's some sort of positive divergence, or we happen to be above 40 when we come into demand. That would be the only way to go long. Cintas was another long I was looking at from the 15th of August going through to the mid of next month, September here. A lot of probability to the upside in the last 15 years. And again, was waiting for a pullback. We just haven't had it yet. So going forward here, started to pull back a little bit on Friday. Hasn't quite gotten to the entry point, but again, you want to be careful. If you got too much momentum to the downside, you're likely to break through that area rather than hold it. So either look for it to be above 40 when we hit demand, or do some sort of divergence for your long entry. Building materials, not really much going on in this chart. Again, we're making a lower high, might be making the lower low pretty soon. So I just don't see any really great opportunities here in either direction. Looking at the energy sector, you can see that we've come into an area of supply and waiting for it to pull back now. So the energy might start to finally slow down, as it was been very, very hot. Even on Friday with everything moving up, it only pulled back, moving down on Friday. This only pulled back a little bit, but it looks as though if the markets keep sinking, we should get more retracement down, probably to at least to $79.26. That's the little basing going on right here before the gap to the upside. So it's a 38.2% retracement I'm expecting at least. Looking at Valero, this was a trade that we were looking at from the 21st. That was last week with almost 90% win rate on that. And Valero never really kind of pulled back to let us in. Unfortunately, we were waiting for that to target the 128 area. And you can see on the 4-hour chart going into this week, it just hasn't actually done it. We pulled back just a little bit, but it doesn't look like it's coming into our demand zones to let us get long. So we might have to give up on that one unless we get some sort of a quick pullback that allows us in. Consumer staples, we went pretty deep into supply with lots of momentum and then tried to go higher, but made this little peak on Friday without going above 60. So lots of weakness that came in. This could fall quite a bit. The nearest demand was right here at about $70. So we're 74.45. We could get a pretty decent drop on this. Just got to figure out a good spot for entry. Consolation Brands is one of those securities under that banner and under that sector. And this was an opportunity I was looking at from the 22nd of August last week with almost 90% win rate. And we were waiting for that pullback. And it looks like, unfortunately, we hit our target before it pulled back at all. So we never got our entry on this one, so we're going to have to give up on that. Now that it's already hit the target, if it does pull back, it probably won't pull back all the way to this demand. It may just bounce somewhere between. So if it does, then yeah, it might still be able to get long. Nothing's really changed on the security as far as trends or anything, so keep an eye out for it, but it doesn't look like it's going to be a very good opportunity. XLV, the healthcare sector, also showing the weakness, lower highs, lower lows. It should continue to push down this week towards the 122 area. That's where I see it basing, and that's the only next demand level I have. So no real trade opportunities there right away. We'll probably have to look on your own in this week. But overall, everything looks like it's going to be another bearish week for the stock market. Danaher Corporation, and this was one that was on the 15th of August, so a couple weeks ago. We're looking at that for a long opportunity. And it started taking off already without us. Let's see. You can see it's getting very close to entry now. So this has been one of the more defensive plays. So I was looking to buy this when the market was kind of a little bit under pressure, and we're almost at entry. But keep an eye out. Again, if we can hit that demand zone 277.44 on Monday morning without being below 40 on the RSI, that's a buy. And the target is at 323. It'll probably take you several weeks to get there, unfortunately. But, it's worth it if it climbs up that price. It'll be about a $40 gain plus. So just keep an eye on that one. It's still in play. The utilities have finally gotten some weakness. They also, too, have the lower high and lower lows, although not as weak as the other sectors. You can see that the recent peak was above 60 on the RSI, not below. So there's still a little bit of life left here. We did almost hit a Fibonacci extension, just kind of stalled shy of that, and they're just pulling back a little bit. Wouldn't be surprised to see us stabilizing right around $74 in here. Next was the financials, also lower high, lower low. But again, on this one, the lower high did stay below 60, so there's much more bearish pressure here than there were on the other markets. And finally, real estate. This one is also extremely bearish right now. You can see that when we try to rally up for that second peak right here, really it's head and shoulders again, isn't it? So let me go to XLY in the actual chart here on the daily. I'm sorry, XLRE real estate. And there it is. Again, I'm not going to worry too much about the supply. We've already hit that and moved down, but we do have this head and shoulders that seems to be forming, with the right shoulder being pretty steep there, as you can see. So if we break the neckline, often the move down is going to be equal to the height of the head. So if we take that head and extend it downwards from where we would break tomorrow on Monday morning, now you're pretty much targeting this prior low right here. And that looks pretty good, right around 40.02. So you can possibly trade the breakdown, or especially if you're below 40 on the RSI, then you got enough momentum to continue down, or wait for it to close below that neckline and retest the neckline as supply before you go short. A lot of times I'll do that. I'll wait for that close below to get confirmation, trade the retest of the zone, and then hit that target around $40. It's 40.02, I believe. Yep, right there. So keep an eye out for that. And we're going to move on to India for the week of August 28th. Sorry, as my dogs are running behind me. Last week, the markets were pretty bearish there. Thought it would have a little more bullish activity, but Titan, Grasim, Coal India, Shrichem, that's about it. Everything, well, LNT was green as well, but not very strong. Everything else is pretty red. So, looking at the Nifty weekly, we tried to break out, and you can see that last week we pulled back inside of that downward trend. Now, that's leaving us with a little bit of buying pressure on that bottom tail of that candle, so not sure if it's going to be able to continue to move down or if we're going to go back up. We did actually close, I believe, above 60 on the RSI on the previous week, so could possibly continue to stay right around this neckline, this trend line, and just go a bit sideways this week. On the daily, you can see how we pulled back after that close above that trend line. Now we're back below. But again, it's more going sideways than anything else. So I'm not seeing a lot of bearishness or weakness coming in. I'm just seeing a lack of buying commitment anymore. So it looks as though we could go just a bit sideways in the Nifty. And on the 4-hour chart, you see we bounced a little bit off this demand zone. That will not withstand another touch, but the RSI trying to zero out right around 50 means that momentum has really just died off and we're going sideways. So again, this week could be a bit choppy, maybe better for short-term intraday trading for the moves rather than looking at longer-term or swing trade opportunities. Reliance on the 4-hour might be doing a double top formation right here. You can see we hit that 61.8% extension twice, and the second time up there we really lost a lot of momentum. So this looks to me kind of like a double top that if it breaks down, it should send us down to about 24.85, 24.90. So look for that as, again, breaks from that demand zone at 25.80. TCS had a negative divergence I warned about. It did finally fall. It took it a little longer than I expected it to fall, but eventually fell down there after the negative divergence back in August 8th and 12th, 8th through 12th right there, I think it was. So I think we're going to continue to push to the downside. Our first demand is this area, right around 31.60. I don't really have a good trade opportunity, but I expect this to continue to sell off until we hit that area, and that'll drive the markets a bit to the downside as well. ICICI banking sector was a bit strong. We had a bit of a pullback and are trying to extend upwards. We're actually stalling out before we can even get to our first target. So this previous high is acting as a little bit of resistance, and we're losing a lot of momentum. So if we start to turn over and break the lows of these candles, expect us to drop to 789. And if we can hold these candles or break the highs, then we should be able to go up to 891 before we pull back, or even 922. But it looks a little weak, so I wouldn't be surprised. Again, if you break the lows of these candles on the daily, let me go out there to it. On ICICI Bank, there we are. And basically the lows I'm looking at it are right there about 866.85. If it breaks 866.85, that's where we're going to get that plunge down to about 789. So keep an eye out for that. Next, we had the bank Nifty. Speaking of banks, you see we broke out of the downward trend. Looks like we might be coming back for a retest though. So, this is on a weekly chart. We had a nice big move to the upside, breaking out of our downward trend, possibly pulling back a little bit first. This is indecisive, really. It's not showing a lot of commitment to that breakout there. So we'll have to see if it just goes a little bit more sideways, I think. On the daily time frame, we're seeing lower high being put in and a real lack of momentum here. So wouldn't be surprised. Same thing that we just saw in ICICI Bank. If I go to Bank Nifty, or Nifty Bank, I go to the indices here. There we go. Yeah, it's very possible that we'll see the breakdown here below those lows. And if we do, that'll take us down to 36,766 if we break the 38,800 area. So keep an eye out for that. And yeah, it's pretty much the same. If we can break the highs, great. It might be able to go up. But overall, if we break those lows, 38,800, we're heading down to 36,766. So again, look to see which way we break on that Nifty Bank, and look, kind of give you a clue as the rest of the week's going to go. Looking at the 4-hour time frame, really not much else there. Whoops, again, you can see that once more we're just kind of sideways in here. And if we can break the lows, we're likely to continue to push to the downside. If we break the highs, well, again, we're likely to continue to move to the upside instead. So there's really not much to talk about in crypto. I did have a slide right here talking about crypto, but I was taking a look at those charts. There's really not much opportunity there. We're still in the crypto winter, so most everything is going to be more intraday opportunities rather than swing trade, as there's no big levels nearby or really great trends to trade. So just keep that in mind. Anyway, let's see. Well, I don't think that's updated for the weekly crypto map. So anyway, I want to thank you for watching the video. If you enjoyed what you heard, please hit like, and don't forget to subscribe as well to the channel. That way we know who's out there watching us, and you can go ahead and get notified when we get new videos coming out every week as well. And don't forget, I put out a new chart school video for this week, so be sure to check that one out. It's on reading price. Really good information about how to be ahead of everybody else when you actually can read price action on the chart properly. So until next time, everybody, trade safe, trade well, and take care.